Because the US dollar is the world reserve currency and is also the one currency that is used to denominate most of the debt, most people on the planet look at the actions of the Federal Reserve trying to determine if there's going to be a global crisis or not. Now, what if the next global crisis is to be triggered by a different bank, a bank that people not pay attention to? I'm talking about the BOJ, the Bank of Japan. The thing is, Japan is facing a crisis, and the crisis is that the Japanese yen is losing a lot of value. It's hit low as it was in 1985, a price that has not been there for about 40 years. And now the BOJ has to take some action. He has to decide to save the currency or not. Now, those actions will affect not only investors, but regular people like you and me. In this video, we're going to look at the situation in Japan, how much debt they have, which is already over 260% of the GDP, and also how the actions of the bank may affect you and me and cryptocurrencies. So here, as you can see on this graph, the Japanese yen has already touched 160 and is about 157 per dollar right now, meaning the Bank of Japan took action to prevent the yen from going as low as 160. Remember, this is how much yen you need to buy $1. So that was the graph on the Japanese yen. And a lot of people can say, well, maybe the US dollar is getting stronger and that's why the Japanese yen is losing value. But that's not the case. We can see on this graph, the light green light is the light that shows the dollar index, how strong is the US dollar. And you can see here that the US dollar actually got weaker, but the Japanese yen continued to lose value. You can see that it is gone from 130 to 157, while the dollar index or the strength of the dollar is actually getting lower. So the dollar is getting weaker, and yet the Japanese yen is getting weaker at the same time. So it's not the dollar getting stronger, it's actually the Japanese currency losing value in relation to the dollar. And another evidence that is not the dollar getting strong, but the Japanese yen getting weaker is when you compare the Japanese yen with the Brazilian real, which is a third world country or developing nation. Remember, the Brazilian real is not a reserve currency, and Brazil is not the third largest producer on the planet. Now here on this graph, we can see how many people or how much shorting there is on the Japanese currency, how many people are betting or how much contracts are betting against the Japanese yen. And you can see that it continues to increase since January 2021. And you can see here it's actually now at minus 179.9, and it looks like that number is going to continue increase. People are betting against the Japanese yen. Now, the problem with so many contracts shorting the Japanese yen is that if the Bank of Japan decides to defend its currency, those contracts are going to go south. Something similar to what happened with GameStop. There were a lot of companies shorting GameStop, and eventually a group of people on Reddit decide to buy the shares. And by them buying the shares, the price increased and caused a short squeeze.
Surprise! GameStop's up about 5x from when I uploaded those videos over the summer, so that's great to see. When you have a thesis and by and large it unfolds as you hope that it could, that's nice. So it shouldn't be taken for granted. It doesn't always happen, so that's great. And yeah, it's just to clear up some potential misconceptions. This was a true YOLO for me. When I was building this position last year, we had nowhere close to $1 million. I certainly do not drive a Lambo. We rent this house that you see. So
now that was just one single share on a company that was about to go bankrupt in America. Now, Japan is not a small company. Japan is the third largest producer on the planet, the largest economy, even though it's a very small island. Also, the yen is the third reserve currency in the globe. So the consequences of that shorting going wrong will affect the entire planet and regular people like you and me. So let's try to understand what is the situation in Japan and how the Bank of Japan got in the situation they find themselves in. The situation is this: the Bank of Japan has promised to the government of Japan that they will buy as many bonds as the government is willing to issue. Now you have to understand, once the Bank of Japan buys bonds, what happens is the government gives IOUs to the Bank of Japan, promise to pay the Bank of Japan, and the Bank of Japan gives the government currency, Japanese currency, which enters into circulation. So that means they're expanding the money supply. And remember, the more currency in circulation, the less value that currency is going to have. So on one hand, the Bank of Japan is holding a lot of debt, 265% of the GDP, and all that money is coming to circulation. Also, the Bank of Japan is promising very low rates, 10% of $1 6%. So imagine this, other central banks are increasing their rates to 5.5%. Now the Bank of Japan is charging 10% of 1%, that is 10 basis points for loans. So what investors are doing, they're taking loans in Japanese yen, shorting the Japanese yen, and then investing that money or loaning out that money to the American government at 5.5%. That means Japanese yen is being taken in forms of loan with very low interest rates, and then investments being made on the other side of the globe with higher interest rates. The situation is, if the Bank of Japan increase interest rates, all that money has to come back very rapidly, and that may trigger an economic crisis. So that's one scenario. So one more thing, the Bank of Japan may not increase interest rates. Why not? Because they're holding a lot of debt. As I mentioned, 267% of the GDP. That means that the increase the rate is very unlikely that the government is going to be able to pay for the interest rates or for the debt, putting the entire Japanese government into bankruptcy. That's why the Bank of Japan cannot increase interest rates, and that's why most investors are betting on them not increasing those rates. And one evidence that the Bank of Japan is not likely to increase rates is what happened when the yen went as low as over 160 yen per dollar. The Bank of Japan, in that case, sold US dollars trying to save the Japanese yen. If they were to increase interest rates, they would have done that. But instead, they decided to buy the Japanese yen to give a short-term solution to the problem, kicking the can down the road or postponing the problem to a later date.
That's a problem for future Homer. Man, I don't envy that guy.
So let's give a little recap on the situation. On one hand, the Bank of Japan has promised to the Japanese government that they will buy as many bonds as the government is willing to issue. That means an increase of the money supply, which unescapably would eventually cause inflation. Now, it's important to understand the population of Japan do not like inflation. 2% inflation for Japan is too high of an inflation. So they're expanding the money supply, which unescapably would cause inflation. And to make things worse, the rest of the world are increasing their rates, which means they're increasing the value of the currency. Like the Federal Reserve has already increased the rates to 5%, which means the dollar is very likely to get stronger. Now, that will mean the exchange rate between the dollar and Japanese yen will continue to depreciate, meaning the Japanese yen will continue to become weaker. And the Bank of Japan is out of tools. They cannot increase rates, and they cannot stop increasing the money supply. So in my view, the only other tool that they have in order to save their economy is to ask for the private sector go after the savings of the population and have those savings to pay for the debt of the government or to push the can or push the problem to a later date. By the way, if you're getting value from this video, subscribe to the channel and also click the like button. Now, when most people look at the situation of Japan, they think of two exits. One of them is increase of interest rates. As I already mentioned to you guys, that is off the table because that's going to send the government of Japan into bankruptcy. The second one, of course, would be for the government to have less expenses or enter into austerity. That also is not going to happen. We all know that governments do not like austerity. They do not like to reduce their expenses, which leave them only the third option. And I know it may sound absurd, but it is a possibility and it has a lot of historical evidence to back it up. And that is confiscating or forcing the private sector, the private savings and funds for pension to sponsor the government. And there's a lot of money there. As you can see on this graph, Japan has over $1.2 trillion on those pensions. And if they decide to use that money to postpone the problem, that's going to give them a much further date to deal with that problem. And in my view, there's a lot of precedent to it historically. All the time when government spends a lot of money, the population has to pay for the bill. And if that happens, in my view, it's going to be very positive for cryptocurrencies. Yes, it may trigger a crisis, it may be bad for the Japanese population, but in the long term, it's going to be great for cryptocurrencies because Bitcoin is one asset that no one can confiscate from you when done properly. And if you want to learn how to store Bitcoin properly, please consider using the link below to join the Academy.